The future of Cardano is absolutely limitless. There is a highly underrated DeFi sector that is building a bustling economy. In a recent video, I boasted about the massive potential that I've witnessed with the ADA ecosystem. Shout out to Mr. KDog87 in the comments. You let me know that I've been pronouncing ADA wrong for the past 6 years. It's not ADA, it's ADA. Thanks for that. Anyway, several of you out there commented on that video that I should be talking about the ecosystem itself that's being built on Cardano, so that's exactly what I'm going to do today. In this video, I'm going to be diving into Minswap and Indigo Protocol, two of the fastest growing DeFi protocols on Cardano. Let's get started. Indigo Protocol is a decentralized synthetic assets protocol built on the Cardano blockchain. It allows anyone to create synthetic assets known as iAssets, which are pegged to the price of real-world assets. They use oracles to collect the data and send it to a price feed. This means that you can gain exposure to the price of an asset without actually owning the asset itself. For example, if you want to invest in Bitcoin but don't want to go through the hassle of buying and storing it, you can create an iBTC iAsset. This iAsset will track the price of Bitcoin. So if the price of Bitcoin goes up, the price of your iBitcoin will go up as well. These synthetic assets work similar to derivatives for those of you who come from traditional finance. Indigo Protocol works by using a system of collateralized debt positions. When you create an iAsset, you need to deposit collateral, meaning money, into a CDP. The amount of collateral that you need to deposit depends on the volatility of the asset you're tracking. For example, if you're tracking a very volatile asset, you'll need to deposit more collateral than if you're tracking a less volatile asset. Once you have deposited the collateral, you can create an iAsset. The price of your iAsset will be determined by the amount of collateral that you've deposited and the volatility of the asset that you're tracking. If the price of the asset that you're tracking goes up, the value of your iAsset will go up as well. You can sell your iAsset at that time for a profit. If the price of the asset that you're tracking goes down, the value of your iAsset will also go down. In this case, you may need to add more collateral to your CDP to avoid liquidation. Indigo Protocol is a very powerful tool that allows you to gain exposure to real-world assets without actually owning those assets themselves. This can be a great way to diversify your portfolio without actually ever leaving the Cardano blockchain. Currently, the only iAssets available are Bitcoin, USD, and Ethereum. Indigo also has a farmable governance token called Indy with a low supply of only 35 million. Its market cap currently sits at only $14.5 million. However, since launching in November, its TVL, market cap, and token price have steadily been on the rise. This chart right here shows a very healthy growth in the market. Now, before we break into the next DeFi asset, if you're enjoying today's video, please be sure to hit that like button. It costs you nothing and helps me out tremendously. Minswap is a multi-pool decentralized exchange on the Cardano blockchain. It allows users to swap tokens, provide liquidity, and earn rewards. Minswap is one of the most popular DEXes on Cardano, and it has a large community of users and developers. Minswap is a promising DEX with a lot of potential. It's well designed, easy to use, and has a strong community. If you're looking for a DEX on Cardano, Minswap is definitely a good option. Minswap also has a farmable governance token called Min with a total supply of 5 billion tokens. Currently, there's less than 1 billion in circulation. This means that less than 20% are on the market and could easily be diluted as the rest of the tokens make their way into circulation. But if the DeFi sector on Cardano continues to grow in the way that it has over recent months, this will become less of a factor. The current market cap of the Min token sits at around $18 million. If we were to compare their market cap to the likes of Uniswap, the largest DEX on Ethereum, the price would currently be sitting at over $1 when you factor in the max supply. Alright, let's break into what I view as the pros and cons of these platforms. Minswap has some of the best features I've ever seen on a DEX. You can export CSVs of trading history, they have the zapping feature, they have a launchpad, there's easy trading and easy farming. Decentralized finance is the future of personal finance. We're breaking the chains of the traditional banking system by using applications like these. Both of these platforms have a governance token that allows the future of these platforms to be developed by its community. Both of these platforms raise the TVL of the chain, which encourages developers to come and build decentralized applications on top of Cardano. Both of these protocols offer higher APRs than just staking your ADA on-chain. Obviously, there's certain risks that are associated with that you'll have to factor into the price. Both of these protocols are built on top of the Cardano blockchain, which is one of the most secure and decentralized blockchains in the industry. Okay, let's break into the cons. Both of these platforms are newer solutions. There could be bugs in the platforms themselves, which could lead to hacks. I would be remiss if I didn't mention the fact that Minswap has already been hacked one time. It looks like they've been able to bounce back from that, but I still thought that I should mention it to you guys. For both of these protocols, there is a slight learning curve, but if I can do it, then anybody can. There's also impermanent loss to factor in with any decentralized exchange if you plan to do any type of farming. If you live in the United States like I do, then you have to factor in taxes on each reward claim anytime you claim rewards on either of these platforms. As with any type of DeFi investment, there's always the chance that the tokens could go to zero, founders could leave the projects, or hacks could occur on the smart contracts themselves. I encourage everybody out there to do more research before investing into products like these. The cryptocurrency market is a very volatile place and comes with a certain set of risks. Also, please keep in mind that I'm not a financial advisor, and nothing in this video should be construed as financial advice. If you haven't already subscribed to my channel, please do that because it really helps my channel grow. That's going to be it for today's video though. Thank you so much for watching. Crypto Clay, out.